What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
All right, everyone. Well, welcome back to The Last Trade. This week we have Michael Tanguma and Jesse Myers, my co-hosts. Just a quick admin update. So Jesse's going to be stepping back from the weekly cadence, and we'll be doing more of a monthly cadence on the show so he can focus more on producing research and content, which I'll speak for the team we're really excited about, because as someone who's been following the Bitcoin space a long time, Jesse's one of the people who has really put out the top tier content, research, educational material. So excited for Jesse to be ramping that up. And this week we have Larry Lepard and Dave Foley joining us. Gentlemen, how are you doing? Thanks for making the time.
Thanks, Jeff. I'm doing great. How about you guys?
Yeah, good to be with you all.
It's an exciting week. Couldn't think of two better guys to have on the pod to talk about what is going on right now.
Yeah, it's been really exciting, and I actually had a dream last night that Bitcoin was ripping 300,000, 400,000, 500,000, and when I woke up, I wasn't sure if it had actually happened or not, because the price action, while it hasn't been that bullish just yet, it has been really exciting to see, breaking through the previous all-time high from earlier this year, and I think we're still a little bit short of the CPI adjusted all-time high. We might have another couple thousand to go before we break through that. But anyways, Larry, Dave, thanks for joining us. Maybe we could just start with any initial thoughts on election results, specifically as it relates to financial markets or the economy. Just, what are the implications of Trump winning this week, and how are you guys thinking about it as investors?
Go ahead, Dave.
I was going to let you go ahead so I could think. I think, I guess quick thoughts rumbling around my head. Larry and I were talking yesterday, and obviously this morning too. I thought that David Brooks had a good article in the New York Times today. Someone had forwarded to me, and I think he's kind of calling attention to just basically, look, clearly America has spoken. There's a lot of people that are left behind. I saw the St. Louis Fed, Palm Valley Capital had a good piece in their Q3 letter of, showing that the top 1% of Americans have an average net worth, according to the St. Louis Fed, of $35 trillion in total. And the bottom 50%, I think I'm getting my data right, the bottom 50% have, $35 million. The average net worth is $35 million for the top 1%. And the bottom 50% average net worth is only $57,000. And so clearly people are feeling pain from inflation. And as David Brooks points out, it's time for people to realize this wasn't about Trump and Kamala. This was about, there's a bunch of disenfranchised people in this country. And they have a vote too, and they have a voice, and you got to respect that. And so Larry and I have talked a lot about, it's about broken money, and it's a broken system. And that's why we all know this here in the Bitcoin space, and gold and silver bugs know it too. And I think you just saw that. I think that's the reaction. So I guess that's kind of...
Yeah, I'll add that David Brooks, for people who are curious, that David Brooks article, I retweeted that. So that's on Lawrence Lepard Twitter feed, and I've got the free share guest, so it's not behind a paywall. So you can actually go read it. It was quite thoughtful.
It's a hell of a headline here. It says, "Voters to elites, do you see me now?"
Right. And it was a great headline, in my opinion. Yeah. I mean, that's the story. I mean, and a lot of people on, in the political trenches are trying to say it's something else, but I think it's as simple as what Dave just said. You have a 40% inflation. People are hurting badly in this country, all except for the people at the very top. And, they're going to throw the bums out. And the problem, I don't think the problem's going to be solved in 2 years or 4 years. My guess is, if you look at the last several elections, they've thrown the bums out, and I think they probably will again in 2 years, and they will again in 4 years as well. So, the money's broken. That's the core issue. I hope that the team that's been picked here addresses that issue. Because I think it's going to come to a head in the next couple of years. That's my timing on it.
But one just coming bounce back on that too is like it feels like 2016. This was the exact same referendum that sent Trump into Washington, right? Hell, J.D. Vance wrote a book about it that created his famousness of hillbilly elegy, and so you could argue it's the same thing, but there's a lesson in that. Like this is not an easy fix. It's not so
No.
simple to come in and snap your fingers and I know that it sounds like John Paulson is one of the leading candidates to be Treasury Secretary, and it sounds like he might be one of the more highly probable ones because he and Musk have been spending a lot of time talking about, the cuts that they're going to make, and they think they can cut $1.5 to $2 trillion off of expenditures. That'll be interesting to watch and see what that looks like and how you do that when Medicare, Social Security, defense, and interest are all upwards of $1 to $1.5 trillion of that. So I'm sure there's waste. I mean, sure, it begins with Ukraine. Probably that's the best hope. I mean, I think Trump can kind of hopefully quiet down some of the Mideast and Ukraine stuff. That will save some money. And then it's a matter of okay, do they peel back the Inflation Reduction Act stuff? But now your brain should be going to the Lynn Alden point. Like that's incredibly important stimulus that kind of kept this economy going. So what happens when you do that? Does that tip us into a recession? Does that force things like the commercial real estate loan issues? The CMBS default rates continue to jack. They were up another 1% on the delinquencies. I should say delinquencies, not default. They were up another 1% last month. They're up 100. They're up from 4.5 to 9.5% essentially over the last kind of 9 months or so. So, what happens? Do we cause a recession and you don't stem, in which case the deficits only get bigger because now you've cut taxes. They'll probably do that. So I don't want to. I'm sure we'll talk about a lot of these things, but that's where our heads are at now, as we're trying to figure out where the puck's going on the fiscal policy front, and what that means. But I think all of us, I'm guessing,
I think it's a very important point that people who think that they're going to be able to just easily take $2 trillion out of the expense bucket they're dreaming. I mean, 80% of it, is Social Security, Medicare, defense and interest. Now they can maybe get the interest down if they lean on the Fed to keep cutting rates. I saw some tweets suggesting that, I'm sure Trump will do that and the Fed will continue to tilt towards short-term funding versus long-term. I mean, we find it very interesting that it looks like in my opinion, they're slowly in the process of losing the long bond market. There just aren't a lot of, there aren't a lot of people who want to own 10, 20, and 30-year debt securities in a country that's this unbalanced fiscally. And we've got the 10-year at mid fours. I mean, the last time that created a problem was when it went over 5 in the fall of 2023, and that's when they said they were going to stop raising rates in order to kind of stop that. But we know kind of 5.5 is kind of a danger level for the 10-year. That higher 10-year, by the way, has affected the mortgage market, right? I mean, David has the exact numbers, but the long mortgages got cheaper there for a while, but that's going in the wrong direction. That's not going to be good for housing. Housing's a big part of the economy. So, I mean, look, Trump's going to have his hands full here, no doubt. And, I mean, hopefully they will do the right things, but, it's going to, no matter who's in this role, they've been dealt a very bad hand in terms of the mathematics of the government, financial condition.
I think one thing to add though, or just to maybe take a step back to election, and it really feels like a renaissance is upon us, at least from the millennial side. I think there's a lot of excitement from this notion of we've had a lot of calls, as maybe you guys have this week, from folks overseas. And as much as some people were surprised here, it's like 2x in other countries like the UK, Ireland, because the level of just effective propaganda is so heavy.
Yeah.
And the renaissance goes back to whether it's Twitter or any kind of quote unquote alternative media where you cannot anymore hide the truth. If you are a truth seeker, you will find it. And this notion of this new administration, like kind of at least embody or is open to it. And that ties into Larry and Dave and the teams. Like there is a lot of pain and there's a lot of problems, but the reality is the first step in fixing them is you have to be knowledgeable and awareness of them and what the problem is. And it feels like that's the silver lining, at least with some of this stuff, is that now these pipes are opening. We're talking about strategic reserves. We're talking about a lot of things that had never been in the Overton window. And how do you solve for this? And we all know once you kind of like have a solution, you ultimately can change the power structure that had been historically not able to be changed because the market didn't know.
Yeah, I think that's absolutely right. I mean, you're seeing a lot of very high level people who understand what the problem is or coming to understand it more, and you got brilliant investors like Paul Tudor Jones who realize that inflation is the way out. I mean, as a practical matter, unless they want to take, a depression, and when this bubble bursts, if the stock market bubble were to burst, it'd look like 1929. I mean, the market's more overvalued than it was in 29. So as a practical matter, if they want to keep the economy running, they've got to inflate. They just absolutely have to, right? And they will, in my opinion.
Yeah, and one thing, Michael, you just triggered in my head is like I'm surprised at how shocked everyone is that Trump did this. Now, I don't know if it's because let's look at our own biases. We're in the Bitcoin space. We're paying attention to sound money and inflation issues. And maybe we've traveled a lot. So going to things like Nashville conferences, you meet with a lot of people throughout cross sections of America, and you saw kind of, hey, there's a wave here. But like, step back for a second. Like, I think whenever that first debate was in May or June, like we all sit there on our couches like, oh my God, Biden literally is out of it. And Trump gave that famous funny punchline that night in what was a really a good debate by Trump where he held back. But he says, I don't know what he just said, and I'm not sure he knows what the hell he just said. It was a brilliant line. It was the right one punch that he gave, and that was it. He was very disciplined. He was not so good in the Kamala debate, but that was the opening. And then it began then with, assassination attempts, and then she's appointed without running a process, and then they wouldn't put her up for interviews. And the last points I'll make is you look to what Larry and I and James had talked a lot about was the Call Her Daddy podcast. The views on that were like low hundreds, thousands, which means she was not resonating with the 24 through, call it 40-year-old women. And then the Oprah ratings were like a few 100,000, a little more than Call Her Daddy, I believe. And so therefore she wasn't resonating with the soccer mom / 60-year-olds. And so they wouldn't put her even on Joe Rogan. Like, she was a terrible candidate. And it was a terrible campaign by the Dems. I often wonder, like, maybe they knew after that first debate they were screwed and they were just like, let's just run down ballot and not put her out there. I don't know. So I'm an independent. I don't have a dog in the fight. I kind of feel like my party's Bitcoin. Like, we're just independent people that want health and happiness for our families and freedom. So the last point I'll make is, like, yes, some of this was about freedom too, of people feeling like they're lied to by their government and they're treated like fools and they don't like the direction of the country and they just want some of that back. And so I'll pause there, but I think that's my only last thought on the election is it's about the money, but I also think there's some of that wanting the country to
I think that's right. And that's back to Michael's point. The Overton window has shifted. Joe Rogan is better than the New York Times. The mainstream media, if they're not completely and totally dead, if they weren't dead before, they ought to be dead now. Even these famous forecasters who miscalled the election. I mean, Polly Markets was a better predictor of the outcome than anything else. I mean, and this is the beauty of the internet and open communication, distributed networks, and it's just going to have such a huge impact on the world.
Yeah, David, I'd say I'm a Bitcoiner. That's my party and has been for a number of years now. But before that, I was a coastal elite liberal, and I have a kind of a tale of two worlds on social media. My Twitter is Bitcoin, and I get that echo chamber, and then my Instagram and Facebook, that's all this time capsule from that old life. And it's been amazing to see the total disbelief again from, my old Stanford classmates who went canvassing for the last 2 weeks, and they're just as shocked as they were in 2016. Side note, I guess that's how long it takes to forget, that you're making the same mistakes again. I remember looking at the in detail maps after the 2016 election showing the red shift in the Rust Belt and just like, how did the pollsters miss this stuff? And now this time around, it's the poly market. There's that French guy who made $40 million betting on Trump in poly market. And learning a little bit more about that, he's been talking about it in the last few days. He was smart enough to realize that there were some polls that were asking the neighbor question of who will your neighbor vote for, and that represented a few percent of a delta from what all the other pollsters were getting by asking who are you going to vote for.
Interesting.
And so that right there is enough to, that's a few percent. That's the election. That explains the 3% bigger numbers that Trump got than all the pollsters thought he was going to get. And it was just because there's some sort of stigma, there's some shame still of people aren't willing to come out and say I agree with Trump and the liberals have gone too far.
Well, Larry and I were talking about that famous Dwight David Eisenhower quote, right? That I think you said, "I despise people in the gutter on the right and the left that hurl rocks at people in the middle," meaning Eisenhower not only warned about the military-industrial complex, he warned about partisan politics that divides us. And so I'll pick on both the Fox News and the MSNBC crowd. I think these people are so out of touch with America and these issues that it makes me realize how early we are in Bitcoin and how early we are in this whole inflation trend, that these people have no idea what this fiscal financial crisis will look like whenever that happens. I have no idea if that's 6 months or 6 years or somewhere in between, but it's not far off, and I don't want to be a doomsayer or whatever, but there's massive risk out there. And I guess that's one last thing that opened up for me this last 2 days is, man, people's heads are in the sand. Completely don't get it. They think this is about Trump and Kamala when it's completely about something else.
So, David, you disagree with Kamala's ads saying that we're going to stop corporate price gouging, and that's the root cause of inflation?
I mean, it's got to be the grocery stores that are to blame for sure with their razor-thin margins. I mean, the whole thing's it's just so stupid. And to watch AOC last night on some tweet that she ranted out, I mean, it's nuts. And it's both sides of the aisle. We're hijacked by these morons on the extremes, and with all due respect, I should be careful with using that word moron to anyone, but it's annoying, right? Because we're forced to deal with all this crap. But look, I think we're all hedged for this, so but most people aren't, and it's sad because we all have these text groups, I'm sure, with our college friends or high school friends, and I think on my high school friend one, there's only a couple of us that are Bitcoiners, and I feel bad. I think some of these guys think that we're kind of outlandish. They just don't understand yet, and yet I think they're starting to slowly learn.
Are you ready to secure your future with Bitcoin? At Onramp, we're revolutionizing how you can save for retirement. Onramp has just launched the industry's first Bitcoin IRA product with multi-institution custody, designed to give you unparalleled security, transparency, and peace of mind. With Onramp, you can verify your assets on-chain and protect them with the support of 3 independent institutions, reducing risks and enhancing security. At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information about our services, as well as our new Bitcoin IRA product, check us out at onrampbitcoin.com.
I'm hopeful that now that we have this unity party and we have both Republicans, Democrats, Independents kind of joining forces, and it's tough to say if Trump actually understands Bitcoin. I would err on the side that he doesn't quite yet, but certainly RFK Jr. seems to have a very deep understanding of Bitcoin, and then those that were advising his campaign seem to be Bitcoiners as well. So I'm curious then if this is really the first Bitcoin administration. Trump's made some bold claims that he wants Bitcoin to be made in the USA. So there's obviously a lot of doom and gloom out there as it relates to just the fiscal situation that we find ourselves in. And frankly, almost every sovereign nation finds themselves in these days. But what role is Bitcoin going to play, in your opinion, as it relates to the U.S. strategic reserve or other ways that we should be thinking about it in terms of a more bright orange future rather than a doomsday type of scenario?
I think that Trump. It's interesting because, as you recall, a few years ago, Trump was not a Bitcoin supporter. Do you know what I mean? I don't think he really understood it, but he was negative on it. 3 years ago or so. I think Vivek got into his ear, and he listened to that. And now he's got JD in his ear, and he's got Senator Loomis in his ear, and I have to say, Trump is Trump, right? I mean, he founds his own shitcoin. I mean, come on, man. I mean, he's in favor of Bitcoin, good, but he launches a shitcoin. Come on, Eric. Get with the program, man. So it just goes to show you that none of these guys are perfect, right? But I think that I mean, my gut is they're gonna bring Jason Lowry back into the administration of the Pentagon. I mean, they're gonna probably listen to what Saylor has to say. I mean, I think it's very bright, and I think they will form a strategic Bitcoin reserve. Hopefully, between now and the end of the year. As I understand it, the government does have a couple 100,000 Bitcoins that they got in confiscation from Silk Road or somewhere else, and I hope that Biden doesn't try and sell those between now and the year end. So there's the beginning of your strategic reserve, and as you know, Lummis introduced a bill into Congress, and so we'll see where that goes. But the point is, yeah, I think they're starting to get it. I mean, Kennedy clearly gets it. J.D. Vance gets it. He said he has 6.5 of them. Vivek gets it, and I have to say, Trump is, there's some good things about Trump. There's some bad things about Trump, whatever. But if you look at him, he's evolved, and I'm very positively encouraged by the people that he's got around him. And if he starts listening to those people, I have a high opinion of Tulsi Gabbard. I have a high opinion of RFK, and others.
I'll throw out there's a very bullish case for Bitcoin in America, but the individuals you referenced as being in the ear on Bitcoin are on purpose, not the individuals that are actually leading on the Bitcoin stance. And the folks there, this is obviously a take, it's not for certain, but it is the people that have been in Bitcoin for a very long time that are very influential. It's like the notion of who's the best monopoly. It's like Google, but they never say they're a monopoly, right? Because you never want to say you're a monopoly. And then when you aren't a monopoly, you say you are a monopoly. You go to Peter Thiel, who JD Vance is a protege of Elon Musk.
Right.
You go to that, and so if that's the angle, and they understand because they're very second and third order thinkers, and they understand the fiscal policy and how do you get out of a position, you start to construct a whole plan before it's even out in the open of like how do you actually become. And so like that's the bullish take of there are actual thinkers. I mean, I know Jason Lowry, and I don't know him personally, but I know there's the book and the things he's done, but these are very like newer folks that have come into place versus like a lot of the guys. You think about even Chamath, Jesse's written about it, was back in like calling this thing schmuck insurance in case of all the stuff in 2011, 12. There's some very deep, influential people in politics that if anything's happening, they're the folks behind the scenes working this plan long before it ever. And an example of this
Very
was
possibly, although I have to say, I don't think Elon completely groks Bitcoin. I don't know. What do you guys think? Do you think he does?
I think he deeply groks Bitcoin. I think it's
Oh,
a show.
really?
Yes, insanely groks Bitcoin. It's a show. Offline, there's a lot of there's a lot of like actual anecdotes that I've heard from very like people who've been in the space for a long time.
That's
That
positive.
Elon's
That's true. That's positive.
The Doge thing is like a deflection. It's
I
a
watched
joke.
him do that, and I watched him do some other stuff, and I thought to myself, this guy doesn't get it. What do you think, Jesse?
We got $3 billion. He has to get something.
Yeah, I feel like the Doge thing was such egg on his face that you wouldn't make that mistake. Like going on SNL and talking about Doge at the exact top of Doge. I think that's humiliating. I think that I wonder about Elon. I've wondered this, that like he thinks he knows money because of PayPal, and so you're gonna have a certain arrogance, a certain hubris of like, no, like I know how this works. And you're going to be slower to be open to other people teaching you about money. Right. And so that's been my mental model of like, I don't think Elon gets it yet. And it's understandable if he doesn't because of that. But, I would love to be wrong on that. I would love for him to already be a Bitcoiner.
Be wrong too. I just don't know.
Yeah, I mean, the thing I didn't expect us to talk about it, but if you really think about it, like consensus isn't that hard, right? Like the notion of consensus not distribution, but decentralization, and like how would you keep something 21 million? Like, so like Elon's pretty smart. Like it's kind of far fetched for him to believe like, well, what makes a good money? Like the leaps aren't like that hard to get for somebody that is that intelligent. Like Now, there's the different orders of magnitude where somebody like has the bias of the yuppie elite that can't get past it, but that is more of a like social construct than like an intellectual one. Anyway, so it's just like
Yep.
part of the reason where like Elon shouldn't have a problem in grokking why like Doge can't be money because you could just make more of them, and if you can make more dollars, that's not money.
Yeah, you're right. And Elon has had an interesting few years that has probably challenged his trust in the system, and so maybe he's more open to it now. Maybe he got it years ago and it has been a smokescreen the whole time. But yeah,
What is
Yeah, and like just to add to that is like I'm sure everybody's had these discussions. It's been kind of like insinuated since the ETF. Everybody's placing their chips on the table from financial institutions on like how they're going to integrate Bitcoin. And then the second part is the Vance, and I don't know if it's Vivek, but there was it Strive, their RIA that's like one of the first to integrate Bitcoin. Like these guys are putting everything like around because they already know what's coming.
Right.
Yeah.
Yeah, what are the implications of that? You know, Elon gets it or he doesn't get it. Maybe he does. Vivek understands it. RFK. All these people surrounding Trump understand it. Trump's still launching shitcoins, so maybe there's a lack of understanding. But nonetheless, the U.S. finds itself in an unsustainable debt situation. But there is also the talks with Senator Lummis and a lot of support there with a potentially million Bitcoin that they want to have in a strategic reserve. So it's like, how do you even think about that as it relates to the unsustainable fiscal situation, the $2 trillion deficits, fiat currencies being credit-based and having to continue to debase, but at the same time, governments stacking Bitcoin, the hardest form of money, scarce digital bearer instrument? How does that potentially mitigate some of these risks or this path that we're on as it relates to just further fiat debasement?
yeah.
Go ahead,
I have
Chris.
some strong thoughts on this, but I'm super interested
You
in
go
Larry
first.
and David's take
You
here.
go first, Jesse.
Well, I guess to tee it up, I think that a Trump administration here on Bitcoin is very mildly good for Bitcoin, probably considerably good for crypto, except if the strategic Bitcoin reserve actually happens, then it's extremely bullish for Bitcoin. And probably not so much because America would be a buyer, but because if there is any sort of real momentum around that, then the geopolitical game theory kicks into overdrive, and there will be sovereign buyers for Bitcoin outside of the U.S. all over the world. And so, like, is it possible that happens this year? Yes. And that would be unbelievably bullish for Bitcoin at a current, total valuation of $1.3 trillion. That would be outrageous. So, I teed up that way first of like, Trump might be like not that important for Bitcoin, or very, very important.
Well, so let me just react to that, because my view is the strategic Bitcoin reserve is a great idea, and he might be able to prevent them from selling the 200,000. I think the odds of Loomis's bill passing are as close to zero as possible, and I say that because, I think what'll happen is, you've got to get senators and Congress people to, as a majority, want to do it, and what they're going to do is they're going to consult with the Federal Reserve, who's the keeper of the currency, and the U.S. Treasury. And they're both going to come out and treat it the same way they treated Judy Shelton's nomination of the Fed board, which is they're going to go berserk and say that if we do this, I mean, as Saylor points out, the first country that started, we can print money to buy Bitcoin, but, which is great because then the country would have Bitcoin, the U.S. government would have Bitcoin, although arguably I'm not sure I want a big central government to have more power. I mean, I'm kind of mixed on this. I mean, I like the separating money from state. I'm not even sure I want Jason Lowery and the state to win and have a bunch of Bitcoin, right? But here's for sure, the people that are fiat masters, the people that are in positions of power, the Federal Reserve and the U.S. Treasury are going to mount an extremely aggressive campaign to suggest that having the U.S. government print money to buy Bitcoin is a bad idea, an extremely dangerous idea, an idea that will probably destroy the dollar. And so you think senators and Congress people, a majority of both, are going to do that? I think the odds of that are zero.
I'll build on that. I mean, last time we met with Jason Lowery up here in Boston, right before he moved to Florida when he was leaving MIT, and this is not, this is nothing confidential, so we can disclose it. he had said that. I remember I asked him. I said, "Well, what's your sense when you sit inside with Biden and them and the administration? How does it go?" And how's this discussion about Bitcoin go? And he said, "Look," he goes, "the Pentagon absolutely was like 100% behind Bitcoin. They're like, this needs to be a strategic reserve asset. This is critical. You got to have sound money weapons, so to speak." It was the Treasury though that that always rules the day down there. And Yellen and them were like, "Hell no! You will destroy the dollar." And so now it's interesting, right? Like I'll throw a slight slider in this is. Like, I wonder if this Treasury, while it is impressive that Trump's going to have it, feels like a full mandate with complete control, but maybe they worry that they don't want to trash the dollar. Or maybe Luke Gromen's right, they do want to trash the dollar and build back America. I think that's kind of hard, though, and I'm not sure life's black and white. I think it's really complex and gray that, like, we're so reliant on all these importation of goods made in China and hell, even oil. We can't even refine our type of oil. We have to get Saudi Arabian oil. That we're relying on others that you got to be careful what you do to the dollar. But I wonder if the Bitcoin-backed bonds is kind of what you're going to see to keep rates in the form of yield curve control. That's one way that I think they could kind of finesse that, which also would be incredibly bullish for Bitcoin. So I don't know. I mean, I think
that's the end state.
Go ahead.
What you described as the end state, Jesse, if you remember, like we did this, we kind of backed into this on accident. We talked with Joel Rebel back in the day when they were doing in Wyoming talk in discussions to do the sovereign stable coin backed by like BTC. And we're like, that's interesting because like you first start with a dollar to dollar, but then if you want to incentivize, whether it's to the integrity of the backing or some yield or whatever, you would put a little bit Bitcoin and you put more Bitcoin to accrue more of the dollars. And then so that was like how this initially, we started talking about it. And then Marty, a few months ago, had brought up, I guess this was a conversation in circles in Nashville about, well, what if you start to put, Bitcoin on 30-year bonds, and how do you start to incentivize the purchase of that? And I'm not smart enough to know like how you go from A to Z, but ultimately you can see how you can slowly progress into the weaning confidence of a dollar into a unit that can get turned into this, and then ultimately you just use it. And so I think there's something there, basically.
Well, and you could argue it's a distinction without a difference to a degree, Michael, right? If I were criticizing my own argument, that's the same difference. They're going to theoretically have to buy the Bitcoin to store as a reserve asset to back the bonds. But there's a slight nuance maybe of the signal that you're sending to the world of we're not trying to trash the dollar. Yeah. I mean, so anyhow, I'll pause there.
And there was a nuance in, I forget the details here, but what Senator Lummis proposed, the bill has a different source of funds rather than printing dollars. I forget where, what piggy bank is being used there for purchasing Bitcoin. But
the only source that wouldn't be inflationary would be, well, and even this would be inflationary, would be if they did what Luke Gromen suggests, which is to say they revalue all their gold, up to $10,000 or $20,000 an ounce. And
I think that was part of the option set.
What she was talking about. And that's the interesting issue, right? The dollar is overvalued. We've got too much debt. I mean, people wonder how we get out of this without, kind of blowing up the world or having hyperinflation. And I think the answer is, as bad as he was, we've got to do something similar to what Roosevelt did, which is we've got to structurally devalue the dollar, maybe in a one-time move, so that the debt is more livable. And, I think the best candidate with which to do that today, and you could do it in two steps. You could do it with both of them in parallel, but because gold is so widely understood around the world and there's more of it, and the market cap is 17 trillion, or 18 trillion, not 1 trillion or 1.5 trillion, you revalue gold. And effectively what you've done is you've devalued the dollar. And, you say, okay, we've got 261 million ounces of gold, which we assume we do. We may not. Maybe even audit it to prove that you've got it, because it's one of the problems with gold. It's not very verifiable. And, we're going to mark it up to $30,000 an ounce, and we stand ready to buy or sell gold at $30,000 an ounce.
Wait. So tell me about, last time we chatted with Larry and David, but I don't think this came up, is Larry was historically a gold bull, but then turned Bitcoin, realized it was going to be money. But now we're sitting at, the bull market that gold believers have been waiting for. We're sitting at 2,700. Which one, Larry? Which one is going to get us out of this mess?
Well, so hang on just a second. I mean, what you're talking about is which is going to be a better asset longer term, which is going to perform better term, and what the ultimate solution is. The point that I'm trying to make is that it's pretty hard right now to revalue based on Bitcoin when Bitcoin's got a $1.5 trillion
Yeah,
market
yeah.
and absolutely no payment rails, no background, no support from every other major central bank, et cetera. And so, we don't have time to wait for Bitcoin to grow,
Yeah.
in order for this to happen. And so, my sense is that the way this will happen is it'll be a two-step process where they'll move first with gold and then the Bitcoin will be the ultimate winner.
Yeah, I'm partially teasing. I was just referencing because of
Yeah.
the gold notion, but also the other side of that coin is that the gold's or the Bitcoin's obvious verifiability that you
Oh,
reference. So
it's
you
much
start to
better.
back it with
Bitcoin is,
gold,
yeah.
and then you start to get the games played on top of
Yeah,
it,
no,
and now
Bitcoin's
everybody's
Bitcoin's better.
offsides.
Bitcoin's better in every single respect. The difference is that the question in my mind is Bitcoin ready for it? Do you know what I mean? 4,000 transactions every 10 minutes. I mean, you should see the volume that gets done in gold every day around the world. I mean, it's just enormous.
Yeah,
And
like
so
we've talked to Jim, like
we need
Stan,
rails.
yeah, like Stan Druckenmiller. We know like guy who used to be his chief lieutenant, and as he said, the thing about Stan is he loves both, but he said he can call J.P. Morgan and put 1.5 billion dollars in gold derivatives down in 14 seconds. He can't put that kind of exposure yet on Bitcoin. So, and look at the central banks throughout the world that are buying gold, and you're going to have the whole BRICS monetary system. Everyone keeps thinking is the BRICS going to have a currency. It already has a backing basically on gold. Everything is going to be backstopped by gold over there. It's the net settlement layer. So this is whether you like it or not. Like I'm not sure they're mutually exclusive. I think as Larry said
No,
though, at the end of the day, Bitcoin is the scarcest. And we can't even call it a commodity; it's a scarcity, but it's the scarcest asset in the world, and therefore supply and demand is going to overwhelm in terms of the price upside. People don't even have a clue, I think, of just how big that will be over the next decade. And yet, gold can be a great performer as well.
it's a step. I mean, they're both new. I mean, what we need is a neutral reserve asset that can't be printed because the printer is what's ruining the world. The printing press, monetary printing press, has ruined the world. We're at the end of the great Keynesian experiment, and so we've got to devalue all that printed money in terms of something that's real. And there are two candidates. One's been around 5,000 years. The other's been around 15 years. And they're both going to get used. And I could argue for going to either one. I just think it's going to be more difficult and messier to jump directly to Bitcoin. I think the countries, just like the countries that were on silver, lost out to the countries that were on gold. Like the people who've made all their bet on gold and don't have a bet on Bitcoin, they're going to suffer. I mean, and I think this is a place where China and Russia and India own a lot of gold, and strategically, geopolitically, strategically, if the United States wants to get ahead of those countries, we should go to a Bitcoin standard. Just skip the whole gold step. But I think as a practical matter, it's going to be hard to convince all the various players in the world, all the central banks in the world, to just immediately go to Bitcoin.
Yeah.
We see them going to gold right now. Some of them are going to Bitcoin, but it's such an infant. It just needs to get bigger.
Yeah.
I mean, when Bitcoin's $1 million a coin, it'll be a different matter.
Yeah, I think we'll see Bitcoin growing up. In a funny way, it makes it so that the individual still has an opportunity to do better than
Oh, absolutely.
than nation states, because they'll go through gold first.
Yeah, for the front line. Look, I've never, I mean, I'm all in for Bitcoin, and I think Bitcoin is vastly superior to gold. All I'm describing here is the way I think that the cards are likely to be played, and that this is likely to unfold, in what I think is a monetary reset that will occur sometime before 2030, based on the math as I kind of interpret the math today. So in the next 6 years, we're going to have a credit event and a monetary event that's going to really shake the world to its core. And I think both of these assets will do extremely well in that event, extremely well. And which one is chosen as the reserve? That's a matter of politics, really.
I think the interesting thing here too is that we were talking about trashing the dollar, and the status quo is trashing the dollar. What we've been living through for the past 50 or 100 years is trashing the dollar and through a debasement of currency. And what we're kind of talking through right now is that sound money is going to be needed to restore any sort of credibility among other nations in the dollar. And whether it's gold or Bitcoin, I feel like it would be gold, just kind of given where Bitcoin is as an asset class and technology, it's still, Larry, as you mentioned, kind of an infant compared to a 5,000-year track record. But nonetheless, I mean, it is going to take something, because the status quo, trashing the dollar, means yield curve control. It means, we have the long-dated U.S. Treasuries continuing to spike in yields, yet the Federal Reserve is, I'm not sure if it happened yet, but likely going to reduce interest rates, right? So,
they just cut 25 basis points.
Okay,
They basically said that they're holding off on taking away QT, but that generally they think it's kind of balanced between inflation and unemployment risks right now. So I would call it was right down the middle of the fairway with a 3-iron is what they hit today.
Yeah, and that makes sense. So then it's like, all right, well, the bond market is sniffing out it. Who wants to touch long-dated U.S. Treasuries, right? And then in the front end of the curve, you have the Federal Reserve lowering interest rates, and it just seems like there will be some necessary action as relates to adopting sound money to bolster the U.S. dollar. If the U.S. dollar wants to stay relevant for the next 50 years, then gold and Bitcoin, likely both, will have to play a role in preserving.
The problem is that debt's growing at between 7 and 10% a year, and GDP is growing at 3% a year. And that's an example of Stein's law that can't go on forever. And so, they've absolutely got to run hugely negative real interest rates. And so this is why they pivoted towards more and more bonds being bills and short dated things versus the long stuff. There is no demand for the long stuff because people aren't stupid. And, and yet, even in spite of this pivot towards the short end, the federal interest expense is up over $1 trillion a year, like close to 2 trillion run rate. And so, we're starting to look like a third world country where you've got to finance it all in the short-term stuff, and they're going to have to start cutting the rates. And of course, that's going to lead to another, bout of inflation. And it's going to lead to probably a higher high in the stock market, which is grossly overvalued. But it doesn't really matter. I mean, we've got to grow our way out of this thing. We've got to have inflationary growth, or else the whole thing collapses. And so the inflationary piece is the piece that suggests that, the two absolute no-brainer investments for anybody are, forms of money that cannot be printed. And the only two that really exist are Bitcoin and gold. So, they're both going to do stunningly well. I mean, I think people are going to be shocked. I think gold's going to 5,000, 10,000, maybe 20,000. I think Bitcoin's going to multiple millions per coin. So, Bitcoin will outperform gold, but it's not as though gold is going away, and the transition between the two is just a matter of time. I mean, it's like the pound and the dollar in the 1800s, 1900s. I mean, eventually the dollar became the world's reserve currency, but for quite some time, the pound was the world's reserve currency.
Does your Bitcoin custody setup keep you up at night? Maybe you still have coins sitting on an exchange worried about hackers. Or maybe you've set up your own self-custody but don't feel safe with your Bitcoin savings stashed on a little plastic device in your desk drawer. Gain peace of mind with Onramp and our multi-institution custody solution. Here's how it works. Onramp creates a dedicated multi-sig vault just for you. 3 separate institutions each hold a key: Onramp, BitGo, and CoinCover. But none can move funds unilaterally. Instead, only you have control over your coins. With Onramp's multi-institution custody, you'll sleep better at night knowing your Bitcoin is stored with best-in-class security on-chain with fault-tolerant multi-sig. If you believe your Bitcoin is going to be worth a lot someday, don't jeopardize that future by exposing your coins to hackers on exchanges, $5 wrench attacks in the real world, or perhaps most importantly, the risk that you might screw something up with a highly technical self-custody setup. Onramp's multi-institution custody eliminates single points of failure, reduces your personal attack surface and technical burden, and provides access to financial services that allow you to confidently secure your Bitcoin, including inheritance planning, insurance-backed warranties for all balances and transactions, low-cost trading, and more. Bitcoin is a once-in-a-species asset. Secure it right. Learn more at onrampbitcoin.com.
One thing that's interesting is that Bitcoin at 75,000 is now the 9th largest asset globally. So while we were talking about it may take a while for Bitcoin to surpass the market cap of gold, which is 17, 18 trillion, Bitcoin is now the 9th largest asset. It just surpassed Meta, and it's standing around 1.4, close to 1.5 trillion. And I think it's only $200 or $300 billion behind the market cap of silver now. So it is pretty interesting to think that Bitcoin is one of the 10 largest assets in the world, and we're still at this point where it's widely misunderstood by certainly any of my peers from the traditional finance space. Like I feel like I'm still like an orphan in the sense that I don't really know too many people from my days at BNY or Stifel and the fund manager space that have really started to understand Bitcoin. And Dave, I'm curious, like, is that your experience as well?
Yeah, completely. I mean, I'll give you some anecdotes here. Like, yeah, whether it's guys I used to work with on Wall Street that call up and they're like, yeah, I see you're involved in this, kind of tell me about it. And you can kind of just hear kind of the skepticism deep in their head, which I've explained to them. I said, hey, that was me in 2015 and I was skeptical too. And Larry and I used to have these debates about gold versus Bitcoin then. And he was right, I was wrong. And then eventually I saw it a few years later. But I think it's natural and healthy for people to question anything in life before you dive in and enter. I'd say, I got ex-hedge fund colleagues that are calling me. I swear some of them might have the Carousdale Capital trade on of shorting MicroStrategy and long Bitcoin. And that's what they try and play is just the spread. And I've explained to them like that can blow up on you 6 ways and here's how. And that's a mistake. And you're underestimating the fact that MicroStrategy has leverage and can leverage it. They are arbing it. They have a flywheel going. You're better off just joining the trend and taking 2.5% of your portfolio and putting it in Bitcoin. And if I, David Foley, am an idiot and wrong and the whole Bitcoin thing blows up, you'll never miss the 2.5%. But if I'm right, you're going to way outperform a lot of your peers. So people just don't understand asymmetry. Look, I think we saw it with the elections. We were talking about at the beginning of the conversation. We're all, it's like those old Charlie Mungerisms, right? We're all kind of like anchored into our biases and we have our mental models and we think we know it all. And Nate Silver has it all figured out that Kamala's got this thing in a landslide. It's to be honest, it's naivete, it's arrogance, whatever you want. So I think that the Larry Finks of the world have showed this is a real asset class. To go through numbers, like I have a hard time seeing, like I've talked about with Brian Estes, that whether this thing really has 10% penetration in the Bitcoin space. I think if you look at, and Jesse, you and I know we've talked about before, is like I think it's in the low single digits.
Yes,
and
very low.
And I think the thing that we always look at is, out of not, Michael Saylor uses your chart in all his slides, right? There's 900 trillion of global financial assets. Bitcoin, gold, and silver essentially are just under 1% of global financial assets. Well, at the end of the 1970s, sound money assets, gold and silver at the time were like 7 or 8% of global financial assets.
Yeah.
If we get an inflationary period or something far worse, I can promise you will be up at 8 to 10% of global financial assets that are likely inflated from here are going to be a lot higher. And so therefore, the obvious thing is bond money. That's where it's going to come from is
right.
The 300, call it 250 to 300 trillion dollars of bond money that's out there. It's going to be easy to go grab 10, 20% of that wallet share that will come flying into bonds when you get a real rate environment that is going against them. And so Saylor always talks about Bitcoin grabbing gold, and I get that, but really to us, the low-hanging fruit is the bond money that's going to come calling for sound money assets. So this is, to us, it's inevitable. Agree. It's just a matter of when.
Yeah, completely agree with all of that assessment. I think right now we've been talking about like how they're going to have to inflate away the debt to make it more manageable at some point in the future. But like I think that's already happening. I think that playbook to some extent. I think there's some parties who are aware that that is happening, and I don't know. And I think that they're not all on the same page about it because people, it's not that well coordinated. But
yeah.
I think inflation is higher than the CPI numbers. I was struck yesterday. Luke Roman surfaced a chart from Larry Summers, former Treasury Secretary, who pointed out 6 months ago that if you run the inflation numbers based on this chart, if you run the inflation numbers based on 1980s CPI basket, we actually peaked at 18% inflation in the last few years. And Larry Summers' point was that of course an incumbent is going to lose in an election if your real inflation is 18% at some point during a president's tenure there. But I think that speaks to, like, if that's true, if 18% inflation is really what has been going on, then bonds are negative in terms of, they're destroying wealth. Every year you hold bonds, you're actually destroying wealth. If, as this chart suggests, we're still in the high single digits inflation rather than the low single digit inflation that official government numbers state. And so then it comes back to, well, what's the value proposition of holding bonds? It's that you're going to do slightly better than inflation.
Yeah.
And that's the store of value proposition of bonds. But if we're already living in a world where that is not true, you're actually destroying wealth by holding bonds, then what are you doing holding bonds? And then here's this new asset that, because of its different set of characteristics, does deliver on that promise of you put value in it today and it grows in purchasing power over time and staves off inflation. There's 300 trillion sitting in bonds, destroying wealth, and all it has to do is wake up and migrate over to Bitcoin. And I think we will see a continuing exodus of that. And then bringing it back to Jackson, your question at the top of, like, how early is it for, how early are we still? Bitcoin's let's call it $1.5 trillion asset, and nobody seems to get it. David's talking about his conversations with his peers. Hedge fund managers should have a deeper understanding of this asset, and nobody seems to get it still. So we're a tiny, tiny slice of the world that has woken up to the reality of this thing, and we're at $1.5 trillion of value. And I think that sort of speaks to how big this thing can get. Yeah. If I think that Brian Estes numbers, those pain me. I think that he says it's like 30% adoption rate already of Bitcoin. It's like, absolutely not. We are
1%.
We are way less than 1%.
Yep.
And that's easy to figure out, because you can go look on chain and see how many people have 0.1 Bitcoin. How many addresses have 0.1 Bitcoin in them? It's 4 million.
Yeah.
And so, if that's a measure of true adoption, that you have put some material savings on chain, then I think that's a reasonable measure of true understanding and adoption of Bitcoin. Well, that's 1/2000th of the world.
Yeah.
So, you're not at 10, 30% or whatever adoption that Brian Estes says. And so that makes it that much earlier for Bitcoin. So $1.5 trillion is just the beginning of us getting to 100 trillion, and I think eventually 200 trillion.
Well, sticking with that election analogy, because we're in that season, right? That it's a little like the pollsters. Like, I don't know what the hell they're all looking at, Nate Silver and them, but just look around at your neighborhood and your peers, like you're saying. Like again, you could look at Call Her Daddy podcast or Oprah ratings versus Trump's YouTube and Twitter hits of Joe Rogan and the tens of millions of viewers. And you can kind of get a sense. They'll ask that same thing of your neighbors, like, and your colleagues, like, how many own Bitcoin when you go to a PTO, parent party or something. Like, it's so small. And granted, I live up in Boston, where it's kind of staid capital, I would argue, with the mutual fund industry. But and I'm probably considered the renegade in the space. And I think 2 years ago, people felt bad for me, like, God, that guy's running his family into the ground and in the Bitcoin space. And now they kind of look at you thinking, oh, is he cocky? And it's like, I'm not cocky. I'm just, just playing the odds of where we see the world going and where the puck's going. And that's our job, to protect wealth and to protect our clients' wealth. And so, but I think that's all you have to do, is understand kind of that anecdotally, how early we are. I think, a couple other thoughts that in my head of, like, let's give them the floor for a minute and a half. Like, if we think about what this administration is going to do, I think the obvious highest probability things are, I actually am hopeful that he can pull off something with Ukraine and Israel and quiet things down with Russia if he can negotiate it. I think they will cut taxes, obviously, or reinstate the Trump tax cuts that are expiring in January. I think that then Paulson, or whoever the Secretary of Treasury is, and the Doge group led by Elon Musk, Department of Governmental Efficiency, it's kind of funny that he calls it that, they'll come up with some cuts. Now, the question is, where's the beef, right? Are they real cuts, or are they bullshit cuts that are kind of, like, I could see something like they cut expenditures on the Inflation Reduction Act stuff, but they start putting it into fracking and drill baby drill to go get oil down to $50 a barrel, because that does stimulate productivity in the economy. But then what I worry about is the bond market. And like Larry and I were talking about, I could argue, if I were being optimistic and charitable, that the bond markets are paying attention to CPI, and they're saying, okay, the Fed's on track to get to 2.5%. They're kind of guiding to that again today. So you put a 50 basis point premium on the short end of where they need to get to over that. So about 3% target Fed funds. They're at 4.5 area now after today's cut. So they have 150 basis points more of cuts to go, theoretically. But then your 10-year treasury yield should trade at about 150, 175 over that 3% target. So it should end up around 475, 5%, 10 years fair market value when you wake up a year from now. Well, that's where you are now. What I'd worry about is what Larry was talking about earlier, is if they lose control of that bond market, if this inflation rears its head, or just the balance sheet starts to matter, that's when this thing, like fireworks, go off. And that's where, to your point, some huge percentage of that bond money is coming running over because of the inflation, because they're losing control of the bond market. Like, that's the obvious one of what can go wrong that creates the next financial crisis. And so back to administrative policies, like, this is a little bit like brain surgery. I think we all wake up on election day and people are like, oh, they'll solve it. It's like, this is brain surgery. Like, if they cut the stim on the Inflation Reduction Act, you're pulling a massive amount of stimulus out. You better spend elsewhere. And that's why I'm not sure the deficit can really be reduced. And I think ultimately Bitcoin and gold and silver will continue to march on. We're going to have pauses and ebbs and flows, but like this train will just keep going. And so I'll pause there, but that's kind of what I see as the real interesting debate of the next 40 days for all of us in the money management business, is this administrative and policies, and then thinking about bond markets and the Dixie over the next year. I think that's kind of where my head goes to today.
Yeah, and that scenario you paint of, possibly inflation running again would be an echo of what happened in the 70s, the sort of bullwhip effect of inflation having several peaks, three really, where each one was bigger than the prior, and it strikes me, I didn't live through that, but it strikes me as human nature that the measures that were put in place then to try to solve inflation, and then you ease up on the measures once you start to rein it in. It's a very human psychology trap that we could be falling in again here.
Yeah. I don't know, Larry, if you want to comment on that before I do.
Yeah, I mean, I lived through
You're
it.
on mute.
Can you hear me now? No?
I'll pipe in. I think Larry's
I don't think
might
I've
have
got a
technical
good connection.
difficulties. Yeah, I was gonna say, I was a kid born in the early 73, and so the only thing I remember the 70s was, like, I remember America just didn't feel that wealthy. That's for damn sure. You'd take your 2-week vacation or 1-week vacation as a family, and you were grateful, and to some degree we were probably happier. We weren't as entitled as a society. You helped your neighbors out. The second thing, I can remember the gasoline lines, where even houses could go on certain days and wait in a 2.5-hour gas line. And I remember the kids in my town selling lemonade on the side of the road in those gas lines. And so, like, yeah, I think as you just described, I mean, inflation is a monetary phenomenon, and the money supply has grown at over 7% for the last 50 years since 71. That's the real inflation rate. It's not 2.5% CPI. That's why people are pissed and feeling it, because just because Kamala and Biden tell you that inflation's checked back to 2.5%, you should be happy. Well, good God, you've dealt with like 45% increases in home prices in the last 4 years alone. Grocery prices are up in the, somewhere north of 20% cumulatively. And so it's, if not more, and it's expensive, and salaries haven't kept up. So now I think what you see is you got wage inflation. I mean, think about every strike you're hearing about in the settlements, whether it was the East Coast ports recently, and, or airlines. And I think that stuff, we're in that cycle, and this is now you chase it, and it's hard to combat it, as all the famous economists have talked about. And so, but I think that, tell me what the next crisis is that relates to that bond market, or tell me how bad the recession is on the next one and how wide these deficits go. And you can kind of just smell the money printer go really fast. And then suddenly, again, sound money's flying, and it's really tough to put back in the bottle unless you're willing to take the economic pain like Paul Volcker did putting us into that double dip recession in the early 80s. That's going to be the choices they're going to have to make. And as everyone knows, these politicians, they're on 2-year election cycles. They'll already be talking about the midterms in February. They're not going to want to make a lot of cuts if Elon and John Paulson are serving up a lot of cuts. So this is hard. We're in a cycle. And so again, we don't get a lot of agita over it. It's like over the medium term, we know how this is going to play out, what the probabilities are. But the next 6 months, it'll be an interesting tennis match to watch here on some of these things.
Yeah, one thing that I thought was particularly interesting, and Dave, I agree with everything you just said there about the bond market and having to think through what the next crisis or inflationary spike could be and how will policymakers react to it. One thing, I'm not sure if you caught it or Jesse, I believe, Michael, you listened to it, but the Howard Lutnick podcast with Pomp was really interesting to hear someone who's has the Wall Street mentality and background and the business mentality think about how to manage the U.S. fiscal position. And he did focus a bit on, let's say, the expense side of the equation and what could be done to reduce the deficit there. But there were some really fascinating ideas about how to leverage the assets within this country, just as it relates to, he mentioned like natural resources and energy. But there were a lot of interesting things that I'll probably end up butchering it, but just the idea of the U.S. government potentially taking equity stakes in startup businesses to have equity position there, and if the businesses are successful and they are able to help those businesses achieve success over the long term, they're growing their equity valuation, which could offset some of the future liabilities of the country. And then just a ton of, like I said, natural resources, energies that haven't really been tapped into that I think supersede like many other countries just in terms of what we have below the Earth's crust here. So I thought that was particularly interesting. Not sure if you guys have any thoughts there, but it's like interesting to hear someone step into the room without the politics background, similar to how Trump did it, and have all these unorthodox ideas about how to manage the government's balance sheet.
And just to add to the second part, absolutely fascinating podcast for anybody listening. The best one I've probably heard in years, because there was one part that the second part was how he managed 9/11, and it's just absolutely incredible because he has a very sad story growing up with losing both his parents. And you kind of realize the only way somebody can manage losing 600 employees is because you had that resilience built in. Really incredible. But the second part of what Jackson referenced was effectively tariffs and the understanding. Again, maybe Dave or Larry, if you're still on, can speak to this because not a student of this notion that A, there wasn't always an income tax, but B, majority of or a lot of the income came from the notion of tariffs. And then after the wars, we wanted to, offshore or bring in, like, how about the other countries? So effectively bringing in their imports, but then effectively exporting all of like the things that were built here. And it's like, no, if you want to play ball, you have to pay. And it sounds so crazy, but it's like when you broke it down from a business perspective, it's like, well, wouldn't you want to take care? It's like I was trying to explain this to my wife. It's kind of butchering what's happening, but it's effectively globalism versus like running the country as a company, right? In Trump effectively cares about the country as a company versus trying to like make everyone else happy. And because of that, you piss some people off, but you end up taking care of the country and the people that are there in this thing. And so that was part of that, like Lutnick positioning, is that there's half on like unorthodox ways to accrue value to the country, but then the second part is how do you actually just like cut off things or make things be made here, which bring back capital.
Yeah,
Larry,
can
I
you
don't know
guys
if
hear? Can you guys hear me
Yep.
now or not?
we can hear you
good.
clear.
You're
Go
back.
ahead.
Oh, that's good. I got technical difficulties. Yeah, so what's happened in the last 50 years is we've offshored our manufacturing base through the strong dollar policy, and it's been great for the elites, and it's been really shitty for the average American. And that's completely reversing. And Groman does the best job of laying this out, but it needs to reverse because the wealth inequality and all the political division we've got is because, most Americans are getting screwed while the coastal elites are getting rich. And so, yeah, I mean, we let China into the WTO in 2000, and they were supposed to trade fairly with us. They didn't. We couldn't sell things into China. They could sell things here. And, there's a lot of sense to having an America first approach to this whole thing. We've got to reshore some of our manufacturing base. But again, it all goes back to the currency and the strong dollar and the fact that we don't have a neutral reserve currency. I mean, that's why it happened. And so, we defended the world with the biggest military, but we also we're able to export our inflation to all of them, and they're getting pissed off about that inflation. And our military is not such a big deal anymore. And I mean, as an example, Groman points out that we couldn't really even fight a war now if we had to. I mean, the components we need to fight a war are made in China. So if China moves on Taiwan, we're screwed. We can't do it. We can't fight back. So this all got to change. And I don't know that I really like the notion that Trump and all these administrations are going to try and do the right thing. I'm all for that. Having said that, the events are going to overtake these guys. I mean, I have a very strong view that this everything bubble is going to pop in sometime in the next 6 years, and that when it does, it's going to be a complete, turn over the table, all new cards kind of situation. And at that point, we'll have to build back from the base of strong money or sound money, some combination of gold and Bitcoin. And the existing political stuff that we have today, you won't even recognize it. It'll all change. It'll have to change because it's just we've gone way, way, way too far in one direction, and we're about to go back in the other direction with a vengeance. That's kind of how I see it.
I think the only thing I'd add to it is, obviously Lutnick's a really smart guy, and I'm optimistic too. I want to be. I just think that it's not black and white. For instance, like to Larry's point, the time for the U.S. to have utilized tariffs was in 2000, 2001 with China before they were able to establish such a manufacturing base when we had real leverage. And it was poorly negotiated by the U.S. at that time. And even Hank Paulson, when he left Goldman, was the Treasury Secretary. Like, he was kind of complaining, even when I was at Goldman and Paulson was running Goldman, he used to complain about China not opening up the markets for Goldman Sachs. Like the iron fist should have been put down then, because now it's late. Because now the problem is you have Smoot-Hawley risk, where if we start going with tariffs and you could substitute, and I got to listen to this pause, a couple people have said it's great. I've heard someone say you could drop income taxes and just go like tariffs and it's like a VAT type thing. But it's like, it's incredibly inflationary, as we learned with Smoot-Hawley in 2930, and that you can have massive policy error on that, and then the consumer ends up just not being able to afford this. The inflation rages, and we get into those cycles that we talked about of chaos. So I don't know how. I don't think it's going to be this black and white easy on that front, and yet I'm curious to see what they're cooking up. And there's smart guys in the room, I think, but it's not so black and white. And I think, yeah, I mean, I think, look, I like the idea though of Trump playing hardball with China to say, open up your markets. I thought, I remember even Jamie Dimon talking about that 5 years ago of how Trump was doing a good job. He basically let whatever that economic council was that Dimon was a part of, that group in Silicon Valley were basically driving the agenda for Trump's negotiation strategy with China. And as Dimon pointed out, Trump did a good job listening to those groups and just fighting their fight. And so that's one of the positives, I think, of Trump, is he listens to business, to Wall Street, to technologists, and says, okay, yeah, I'll go negotiate. I just worry that it's too late. Like, I don't know how you solve it cleanly. This is like brain surgery again that I think these guys have to deal with the economy. I sure as hell wouldn't want to be Treasury Secretary or the Fed chair. I think there's a lot of real tough situations going on in the next few years.
There's one aspect that we haven't talked about. Like, I think one we probably would objectively agree. The other one's a little bit ties into the brain surgery. But the first one is we always end up in these positions where we overextend ourselves in the price appreciation of Bitcoin. The market comes back, but then we all get to hang around and see all the fundamentals grow while nobody else knows, right? So we all would agree, like risk adjusted, this is the absolute best time. And the amount of plumbing that has been built to bring in capital is insane. And so, like, independent of the brain surgeon incorporating Bitcoin into offsetting this, we're probably primed to see some price appreciation um, at levels we've never seen before because of the amount of visibility and again the strategic thing. Whether there's any chance it's the Overton window that Jesse's talked about with like back in the day when Lemus brought this up, and then it's just like now we have a president. So point being is there's game theory with that. So that's just incredibly bullish in the sense of you get to sit back and look at like there was a tweet, and I've always thought about this. It's like the Bitcoin price could be 500K tomorrow, and like what really changed from a fundamental perspective? It's just mispriced. Now the second part goes into the brain surgery, and it's just something I thought of over the course of this pod. I don't know like if this is giving them a lot of credit if this was part of it, but to your point, what we talked about is Well, this asset's too small. It's only 1.5 trillion. Well, what size does the asset need to be? Does it need to be gold's previous market cap, 10 trillion? Well, that's actually only 6x from here. And what's 6x from here? What is that? 360K, 350? Like, how far are we from that? 6 months? Is it a year? So you can start to like mess with dials potentially where you can use this asset to do things. And again, nowhere near smart enough to understand how to perform that brain surgery, but I don't think it's as far fetched because it's this notion of it took 15 years to get to $1 trillion asset. It's going to be a lot quicker to get to a $10 trillion asset. I think we all know that. So there's something interesting there that it'll be fun to watch. Like I can't help but be optimistic with everything because it's been so bearish for so long with all that's happened that post this election, I'm just gonna like take the white pill forever until proven otherwise.
Yep, I hear that.
Yeah,
Yeah.
react to
Go
that
ahead,
real
Jack.
quick is just that there also needs to be more access, right? Like this was a big year in particular for Bitcoin because of the ETFs. The five of us didn't have to wait for BlackRock or Fidelity's ETF product to come out for us to want to allocate to Bitcoin. We've been doing it and we figured it out ourselves with Bitcoin native products, but most of the market may not want Bitcoin native products as they exist today, in the sense that they have a Charles Schwab account. It's very easy to purchase ETF shares and then forget about it. It's much more painstaking of a process and at least requires intentionality to be seeking out a Bitcoin exchange, purchase it, and then go through a process of trying to understand how do you secure the asset. And we talk a lot about that, and Michael, maybe it was your point originally, but we have a $1.5 trillion asset class in front of us at the moment, but Bitcoin could have been potentially a $2 or a $5 trillion asset class after 15 years if there were different solutions to meet people where they're at. And I think that's what I'm also hopeful for, just seeing firms like Strive Asset Management, Vivek's firm, wanting to step into Bitcoin in a wealth management capacity. You imagine how much the ETFs did for credibility for Bitcoin in the traditional finance space. If you have other firms beginning to offer new access and entry points and differentiated ways to access and invest in Bitcoin, that's going to be really important for the industry. So I am excited about that. And funny enough, Cantor led the Series B for Strive. So you're starting to see this kind of ecosystem in the traditional finance world that's really bullish on Bitcoin and wanting to invest directly into the ecosystem.
Yeah, and Larry and Dave, maybe just to give us a little of a shout out, but I don't know, did you guys see that the first UK pensions allocated to Bitcoin this week?
I did not see that. No.
So
Yeah,
the
I
first
actually
UK
saw it.
pension, they allocated to Bitcoin, but here's the kicker. If they allocated to our on-ramp Bitcoin trust, if that thing didn't exist, they wouldn't have allocated because they couldn't find a solution without counterparty risk. And so while it was just the first pension, I think they advise over 100. The point goes back to Jackson, independent of us being involved in it, is the reality of people want to put material wealth in this asset, but they can't find bulletproof solutions because at the end of the day, they can't wrap their head around putting it on a hardware device and God forbid losing it or leaving it on Coinbase. And we all know the things that have happened with centralized exchanges. So that's the real exciting part is as we professionalize this asset class for serious people, there's going to be the products that exist. And once people find out that there's ways to get exposure to the asset in a security-like fashion while not having the underlying counterparty risk of a single custodian, but then also being able to take delivery, that's going to start to really put, the market kind of like at least the knowledge that there's better products out there. And then ultimately we all know kind of the product at the end of the day that fulfills the needs of the end client are going to win.
Yeah, no doubt about it. And you look, there are huge advantages of just controlling your own Bitcoin, and using guys like you guys to do that is critical, right? And I think that some funds obviously are constrained in terms of regulatory reasons, can't custody their own assets, but as those solutions develop and all that, there's no doubt. I mean, having your own possession is ideal, and so yeah, no, that's phenomenal. Great work by you guys.
Yeah, it's a pretty exciting time. I mean, we were talking on another pod a day or two ago about this. I mean, if you look at the the power law model, which I subscribe to until it breaks to the upside, we easily get to Max's number of 230,000 a coin, sometime next year, and it's entirely possible that we squirt well beyond that in the 3, 4, 500 range. I'm not sure I'd be a buyer at 500, but it's it's really this ramp is going to be something to behold, and it's going to kind of, I think, put to rest forever the notion that this is not a real asset class. At that point in time, and sadly, a lot of people will be paying 250 for it, and only to maybe have it draw back down to 125 at some point. But it's coming. You can just feel it coming. I mean,
Yeah.
I'm incredibly bulled up for the next 6 to 18 months.
Yeah, it sure does feel like it did in 2020, around this time of year too, around the election. We were at 10,000, I think, starting October 4 years ago, and then got up to 13,000 at the end of October, and that was just the beginning.
And Jesse, let me jump in on you there too. I remember that period very well, and I held them both. I mean, the clue is gold, right? I mean, gold has just been relentless, and it broke 2070 and it marched to 2,700. In a negative real interest rate environment without missing a beat. And so, gold is the much more widely distributed asset that more people are focusing on, the issue of monetary debasement. And so Bitcoin always follows it, but then it goes way beyond it in terms of performance. And that's what's going to happen here. You can just feel it.
Yeah.
You can just feel it coming.
Yeah,
Larry, thank you
for... time lapse.
Yeah, go ahead, Michael.
No, I was just going to say, I have the chart up,
Yeah.
Larry. I don't know if you could see it. It's like even this time last year or 4 years ago, we hadn't even broke the all-time highs.
Right.
Well, and some people, it's not necessarily even that it's the halving cycle that does it, although obviously it makes sense it does because it creates more scarcity. But someone has said it's really the election cycles that drive this thing, right? It's when you get the post-election uncertainty that you get this lift off right after it, right? Post-November. So, I think it's both, right? It's the halving and the election cycle. But it makes sense, as Larry said, that right now after gold's run higher here over the last 5-6 months, it feels like it's about time for Bitcoin to take that baton and go.
Yeah, and Larry, thank you for keying me in on that dynamic with gold. It is kind of amazing to look back in time and see how gold's legs up in the past preceded Bitcoin's following it, and of course with much greater amplitude when Bitcoin finally does move. And I wonder what that is, but I guess it could just be that people who are into gold are hard money first, and they're focused on the sound fundamentals of gold, and investors in Bitcoin, I think, unfortunately, are still probably 90% like this is a risk-on tech asset,
There's certainly some of that. Yeah, I agree with that, but I think it's shifting. I mean, more and more investors of Bitcoin are sound money people, but yes, I mean, there are a lot of people who said it's really heavily correlated with the NASDAQ, but I think in this cycle that's going to break, because I think the NASDAQ is going to eventually, the bubble in the stock market is going to burst. It cannot go on forever unless we just have a total crack up boom, in which case Bitcoin's going to 1 million. And I think when this bubble bursts, then what's going to happen is what I call the big print. It's going to have to be bigger than the last one. And that's going to just drive all these assets. They're just going to go nuts. I mean, it's going to be, and people are going to wonder what the hell's going on. I mean, including the people in the Treasury and the Fed. They're going to, Powell is about to be, he is going to truly be a deer in the headlights. He has no idea what he's playing with here. He's way over his head.
Yeah, gold ripping that 2,000 mark was the big tell, because after that it was game over.
Yeah, and that last print, Larry, was 10 trillion in the US, 20 trillion globally for the COVID stimulus.
Yeah, I mean, I personally back the envelope thinking that we're kind of the Fed balance sheet is going to have to go to between 20 and 25 trillion. I mean, imagine, if you will, the stock market burst and just the implications of that for taxes, for transfer payments, all of that stuff. And imagine they go QE, they go yield curve control, they expand their balance sheet massively, and it's still not enough. Very similar to how in the beginning. I mean, when March 2020 came around, Powell started with $40 billion of monthly purchases. Didn't even move the needle. He had to go to 120. And that's what's going to happen this time. Each one of these things has to become progressively bigger. The printer has to run harder with each event.
And I think that kind of speaks to, again, back to how this is not black and white, with Lutnick and these guys trying to solve it. You got to remember, like, Bernanke had to keep the pedal to the metal in terms of quantitative easing and low rates for a long time into Yellen then taking over for him, Powell's the one in 2018 that tried to raise rates and dial all that back, and then the repo market broke. Like, it's so important for growth, this GDP growth, to have this government stimulus, both monetarily and fiscally. And so if they they almost don't have a choice but to keep that going. And to Larry's point, in a typical recession, you should see the deficit jack out to about $4 to $7 trillion on average, right? Depending on what tax receipts do and the state unemployment benefits that kick in, because taxes go down, tax collections go down during recessions. So if you're doing that, combined with the fact that there's just so much debt in the system, and then this goes into the Van Hosington guys of kind of how there's so much debt. Like, just because you're cutting taxes, I'm not sure consumers and corporations can keep pushing on a string and spending. There's probably going to be a marginal propensity to save at some point, which is going to force the government to have to come back to spending and cutting taxes to drive deficits higher. So there's so many things that likely just speak to, as Paul Tudor Jones said, it all roads lead to inflation. All roads lead to deficits and larger deficits, and then the inflation as well. And so,
it's the classic gradually and then suddenly, and we're in the gradually piece. But boy, it's getting faster. It's getting faster and it's getting larger. I mean, they weren't even able. Powell wasn't even able to tighten. He started tightening in early 2022. And by fall of 2023, the 10-year went through 5%, and they panicked, and they had 12 guys within 10 days say, "Oh no, we're done." I mean, they just you just know what's going to have to happen here. I mean, it's hard to see if you're not watching this stuff day to day, and if you're not deeply involved, you don't know what these guys are. I mean, the Fed's got a third mandate. The third mandate is really the most important one, which is financial stability and continuity. And we just know they'll break all the rules to keep that going. Excuse me, and they have in the past.
Yeah. No, those are all good points, and it makes sense. I mean, you can't really undo all of the fiscal irresponsibility of the past several decades in one term. So it'll be interesting to see, nonetheless, what kind of unconventional methods could be used to try to balance the budget. Absolutely. I know there's talks of it, but
absolutely. And by the way, I'm rooting for them. I don't want to see all this happen. But right. I'm just saying it's mathematically likely to happen.
Right. Yeah, and I agree with that. Well, I know we're up on time anyway, so unless there's anything else that was really top of mind, Dave and Larry, want to thank you both for jumping on. I'm sure I would think that most people, if not all, are familiar with the two of you, but maybe you just want to give a handoff as to what you're working on these days and where is the best place for people to get in touch.
I'll let Dave do that because POF is doing another fund and there's a lot going on.
Yeah, so I'm involved. James Lavish and I run the Bitcoin Opportunity Fund, and we are looking to launch a second fund here shortly. And Larry and I also are affiliated with Equity Management Associates. So those are the two things that I'm involved in. And
Dave, you might mention your rough returns so far this year in the BOF. You've been doing pretty well.
Yeah, no, I should look what it's up here, but yeah, no, we've done well. I think we're up, I don't know, 60% plus on a gross basis and all that. But so yeah, I think things have gone well.
Awesome. Thanks for coming on. If anybody's listening wants to get a hold or is in contact with us, we can put you in touch with Dave and Larry. And then Dave, to the extent you're interested in talking to some of our private clients about what you're building, happy to set something up where we can get a round table. We do them with other asset managers across the board in the Bitcoin ecosystem. So happy to facilitate that if it makes sense.
Terrific, Michael. Thank you.
Thanks, Larry, gentlemen. Appreciate the time.
Larry, I don't know if you want to mention your book.
Oh yeah, I'll plug my book. So I'm writing a book. The goal is to have it out at the end of the year. Might slip a month, early into next year. The overarching goal of the book is to write something that an average citizen of any position or financial level of knowledge can read and say, "Oh my goodness, I understand what's wrong. I understand it's the money. I understand what the Fed has done to us. I know what I have to do to protect myself, and I know what I have to do to make the world an overall better place, above and apart from protecting myself. That is to say, take money creation away from the state, because that's what's ruined our world." And so it's about a 200-page book, but it's easy explanation. I've really borrowed from everybody else. And Jesse, I've got your chart in there, which is one of the most fabulous charts ever. The total available market for all these assets. And yeah, it's hopefully it's a book that will be something people can give to friends and neighbors, and people will read it and go, "Oh yeah, I see. You got a good point."
When is it out, Larry?
Year end is the target. I'm working hard with an editor right now. It's surprisingly difficult to get to a final edition, but it's not going to slip much beyond year end.
Well, put us on the hook for some of them. We'll not that our clients might need them, but we can give them to them for their friends and family. So shoot me a note. We'll definitely get down to 50 to 100 at least to start, and send them to our
whatever.
client.
Yeah, whatever. I mean, that'd be great.
Just 10 seconds on it, having read it myself, these drafts and helping Larry with it. What I like about it is one of my favorite books of all time was Tom Brokaw's The Greatest Generation. And what I loved about it was not only because of the great stories of the people that grew up during the Depression and that World War II generation, but each chapter was like 3 pages, 4 pages long. So it was the best nighttime book reading because you could get 1 or 2 chapters knocked out, go to sleep, work the next day, then come back and plow through 4 more the next night. And that Larry's kind of written it like that, where I think it's a really good piece that builds on it, and it's a really great educational thing. I think actually every high school kid in the world should be reading this once it's out.
That's exciting. Well, yeah, I'm always looking for new resources because the thing is with Bitcoin, there's just so much information out there, and I really struggle to find the best one individual resource to point people to and also be digestible as well. So Larry, excited for that. You've done so much great work over the years, so excited to check it out.
It's not a textbook. I mean, I think Lynn and Safe and Jeff have written much better books. This is meant to be, and I borrowed a lot from their books, by the way. This is meant to be something that anybody could read quickly and easily and get the gist of our message.
Awesome. Look excited for that. Appreciate you guys coming on, and look forward to the next one.
Thanks,
Great
gentlemen.
seeing you guys as always. Thank you for having us.
Thank you, David. Thank you, Larry.
Guys, thanks all. Take care.
Guys.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.